Hey my Skysavers, welcome back to my channel, or welcome. I'm Kim and this is World of Sky, a world for women and moms looking to save money and get the most bang for your buck. And today we are talking about outdated money rules, money advice, just old advice. That's what we're going to talk about in this video today. Okay, so you may have heard your parents, your grandparents, your aunties, your uncles talk to you and give you money advice as you were growing up. Financial advice, things you should do, things you shouldn't do, you know, that kind of advice. Now, I'm not saying that the advice that they gave you was wrong, bad, or whatever. I'm just saying that they gave you advice based on their experiences growing up. Because of the advances in technology and our economy, a lot of that information is just old. It's old, you know, so the things that they told you about like back in the day, those things have changed. And so we need to change our money rules too. Before we get started, if you haven't done so already, please make sure that you are subscribed to my channel. We're all about money here. Trust me, girl, your purse, your wallet, your bank account, it will thank you. Okay, number one, credit cards are no good and they are such a bad deal, right? How many times have you heard that? Now, I am going to preface this with saying that credit cards can be bad. They can be very bad if you are not using them responsibly. Okay, so that's my PSA. I said it. Make sure you're using your credit cards responsibly. Because nowadays there are so many positive things and benefits that you can take advantage of when using your credit card. So many of the credit cards have programs where you actually earn cash back for things that you were gonna buy anyway. So anything that you're gonna buy, you can put your bills on there and then you can receive cash back for spending that amount, right? So you're not spending more because you have the credit card. You're just getting an incentive to use the credit card instead of cash when purchasing things that you can afford, okay? That you can afford. If you're big on traveling, there are a lot of travel credit cards and things that could result in free vacations, free flights, free hotels. And then if you're a frequent traveler, you may benefit from some of the things such as free checked bags, priority boarding, and things of that nature. So credit cards have a lot of different benefits for the type of lifestyles that we live today. So you definitely don't want to miss out on the opportunities that a credit card could afford you to have. Like I said before, just be responsible with your credit card. Only put things and charge things on your credit card that you know that you can pay for. Pay your balance off in full every single month so you're not having any interest charged to your account, but yet and still you still get those perks and benefits of the cash back and the rewards. If you currently already have a credit card, comment down below and let me know what your favorite perk is of your credit card. For me, it's definitely those free check bags. Okay, because I really hate paying baggage fees. So if I can check my bag for free, you done sucker me in. So if you're new to credit cards and you want to know more about what is a credit card, how do they work, how are they different from debit cards, check out this video. It's very helpful. It's for beginners or maybe those who don't have a great understanding of how actual credit card works. Check out the video. I dive into all of that for you. Number two, you need a very rigid budget tied to very rigid numbers. Let me explain. I'm sure you heard advice that says you only need to spend 30% of your income on housing and spend 20% saving, right? You've heard those hard, rigid 30-20 numbers, okay? Of course, we all need a budget. You need a budget, okay? If you watch this channel, you know we're all about budgeting, saving, all that good stuff. So you absolutely need a budget. But use those percentages as kind of like a guideline of what you should do. They don't have to be like hard, fast numbers because everybody's situation is different. Because things vary based on where you live and what your income is. So if you have a large income but you live in an area that has a very low cost of living, you may only spend 20% of your budget on housing, right? Because you make a lot, it's cheap to live there, so you don't need to hit that 30% recommended threshold. Or maybe you want to live downtown in a big city. Like, who doesn't want to live downtown in a big city and live it up? I mean, I guess some people don't like that. But let's say you do. You want to live downtown. Now, we all know with living downtown in a big city, it's usually more expensive. Your housing costs are just going to be more expensive than they would be living in the suburbs. But because you're going to be living in the city and they have a great public transit system, you may decide that you don't need a car. So if you don't have a car right there, you may have eliminated a car payment, car insurance, gas. You get where I'm going with that? So instead of using 30% towards your housing, maybe you're using 40% of your budget towards your housing. Because you can do that, you've eliminated other expenses in other areas. So the point is to use those numbers as a guidance. Use them as a framework, not as an exact number that you need to follow. The goal is just simply that you are making progress towards your financial goals of saving, investing, and or paying down debt. The third piece of advice is to have a $1,000 emergency fund saved at all times. Of course, you need to have an emergency fund, okay? I'll repeat that for the people in the back.
You need to have an emergency fund.
This is an account that you put money in for an unexpected emergency. So things like loss of job, or your car needs to be repaired, or you are unexpectedly sick and you have unexpected medical bills, things of that nature. Emergencies, things that you haven't really planned for. So I'm not saying the rule of needing an emergency fund is outdated. What I'm saying is that only having $1,000 in your emergency fund is not going to cut it, okay? You need more than $1,000 these days in your emergency fund. You know, back in the day when I was young, I'm not a kid anymore. No, but for real, back in the day, things were much cheaper than they are today. So back then, you could get away with having $1,000 in your emergency fund and things come up, and that could take care of a couple or a few different emergencies for you. But today, honey, that $1,000 will get eaten up so quick, it's not even funny. It can be very frustrating, but that's just where we are. It's more expensive today. So the bottom line is you have to have more than $1,000 in your emergency fund. Now, exactly how much you need to have in your emergency fund, it varies. It depends on your expenses, your cost of living, and other factors, okay? So this is a very personalized number, and it's individual to every single person or every single household. If you want help calculating your emergency fund goal and what that number should be, check out this video where I talk about emergency funds, okay? They're that important. They're that important that I created a whole video around emergency funds. And throughout that video, I will walk you through how to calculate your specific number. So check it out. I will link it right here, as well as leave the link for you in the description box below. Number 4, only pay the minimum on your student loans. Yes, student loans, or should we call them the devil? Yes, we're going to call them devil loans. So only pay the minimum. How many of you have heard that? The old thought behind this is that student loans were like good debt, right? You have good debt and bad debt. Okay, so they say that it's good debt, but if you're like me, you know, ain't nothing good about them student loans, okay? Nothing. Student loans were considered a part of good debt, and that is because you typically have a lower interest rate on your student loans. Federal student loans, that is. Private student loans, you know, it's up to the lender, so those tend to be much higher. If you follow this philosophy of just paying the minimum on your student loans, let me ask you this. Let me ask you a question. Have you seen that student balance go down much? I'm going to guess that most of y'all said no. I'm going to guess that you said no. My balance is the same. My balance is higher, right? That's a real fun one to try to figure out. So this rule is outdated, okay? Only paying the minimum is not going to get them things paid off. Now, if you're in a program for loan forgiveness over a certain amount of time, paying the minimum may make sense if you know that you're going to meet the requirement in order to have your loans forgiven. I'm talking about those people that are not on track to be in a program for loan forgiveness, and some way, somehow, you have to get those student loans paid off. You're going to want to pay more than the minimum every single month. Now, even if you can just pay a little bit more than the minimum, that will help, okay? You'll be bringing your principal down, lowering your balance, and being able to get them paid off faster. So definitely consider paying a little bit over the minimum amount of your student loan if you can. The last one is that you need a money guy to manage your money for you. First of all, there's not just money guys, there's money girls out there too. So shout out to all my money girls, hey. But in all seriousness, you don't need a money girl or a money guy, also known as a financial planner, to help you manage your money or investments. I mean, unless you have loads and loads and loads of money, and if you do, you're probably not watching this video. If you are, thank you, thank you. But seriously, if you have a lot of money, you may want a financial advisor. But if you don't, there are tons of resources and technology. You have endless options of figuring out and learning how to manage and invest your own money. Okay, you can do this through online apps and online brokerages. There are tons of options. I know that paying your money guy or your money girl 1% doesn't sound like much, okay? 1%, you're like, no big deal. That's cool. Take your 1%. But over time, as your money grows and grows and grows, that 1% can be thousands of dollars, okay? That 1% turns out to be thousands of dollars long term. So keep your own money. Keep your own money. There's lots of resources for you to learn exactly what to do. There's free and there's paid resources out there. Whatever route you take, learn how to do this, okay? If you don't want to learn how to do this, there is still another option for you before you go the financial planner route, and that is to use a robo-advisor, which is like a super smart computer, and it will manage and invest everything for you. Okay, so that's another option that you can take. Okay, so those are 5 outdated, old, however you want to say it, money rules and money advice. How many of those rules have you heard? Comment down below and let me know. Before you go, please make sure that you subscribe to my channel, hit that little notification bell so you don't miss any future uploads from me. I do upload new videos every single week, and they are pertaining to saving you money in some fashion. That is it for now. Thank you so much for watching. I appreciate you, and I will see you in my next video. Happy saving!